Welcome back everybody into the FOMC meeting analysis, sort of preparation towards the FOMC meeting. As you for sure you know, today the Fed has to announce their decision on the interest rate hike. As you can see, the last one, we are currently at 1% interest rate, and the consensus looks like it is 1.5, so it's a 0.5 rate hike. There will also be the policy statement release and the press conference. But what is very important to understand is that there might be a potential for a 75 points hike, which will be from 1 to 1.75, which will be higher than expected. But let's have a look at the chart. What is the chart telling us? The chart is telling us that from February till March, we had a very bullish run due to the geopolitical reasons of war. But since then, with the Fed announcing the interest rate hikes every single meeting of the FOMC meetings for the year, the price of gold went very, very bearish, with a huge correction, complete correction of the hike from February. So went from 2070 back to the 1800s where we are right now. It's very important to understand what is happening in the short term. As you can see, this is all the interest rate hikes and the optimism in the charts, in the markets, and what happened in the last few days coming towards this FOMC meeting. As you know, of course, the meeting is Wednesday, and there has been Friday, June 10th, the release of the CPI, the inflation. Okay, why does it matter so much, the inflation? So, the inflation is one of, in my opinion, the three main points that the Fed and everybody is looking at. The CPI is a very, very important and very, very sensitive information right now. The interest rate percentage hike is a very important digit that is is affecting a lot the markets. And of course, GDP, retail sales are strongly correlated to the above, because there's a sort of correlation where if the Fed is in the middle, they want to fight the inflation, but if they fight it too hard, they will bring a fast recession to the markets. So why do they have to fight the inflation? As you can see here, the inflation has been growing since when the Fed started printing money down, even with the war that brought some more problems and issues with the supply chains, especially of food. We have a very steady growth increase in the CPI and the inflation, which reached June 10th, reached a new high at 8.6%. This is the highest, and even without excluding food and energy, which are the most volatile object of this index, as you can see, the price was still higher than expected. Slightly lower than previous, but higher than expected. But with food and energy, there was a much bigger growth increase. Yes, we might be flattening the curve around here, around 9% of inflation, and that's what the Fed want to do. But as well, if the Fed wants to fight the inflation too hard, so for example, today they announced a 0.75 increase instead of 0.5, there's the very high risk that a recession is very likely, which will be that's because of higher interest rates is going to tighten the economy a lot, much more than when the interest rates were low or zero during the old pandemic, which brought the price of gold at these levels. As you can see, from 2020, all the interest rate at zero, due to COVID brought price over there in 2020. But now, as you can see, we are at this point, exactly at this point. So what is the Fed going to do? It is expected there's a potential of a 75 basis points rate hike, which will be very high, as you can see, 1.75, and is a very high rate. And yes, today Powell will talk about the future outlook. So we say, okay, from now on, we will increase 0.5, we will increase 0.75. But what do they see this action? How do they see the correlation and the reaction? How does it affect the GDP, unemployment? Because of course, if you cause a recession, unemployment will increase, GDP will decrease. And exactly, as you can see, the Fed will decrease the expectations for GDP while raising forecasts for inflation and unemployment rate. Exactly. I wasn't even reading, but yes, this is exactly what might bring a high interest rate. And post-meeting statement reflect current situation. Inflation is running at a faster pace than anticipated. This is because if you know that up to today, they always say that inflation is above 2%, but we're going to bring it down, blah, blah, blah. And if they require more aggressive action, that will mean higher interest rate hikes every meeting. Yes, it's very possible that if they want to fight the inflation very fast, they have to fight it very hard. And as you can see, what happened? Okay, so now we know what the market is expecting. There's a potential for 75-point interest rate hikes. So this is the daily candle of yesterday. Okay, so what is happening? What is going on? Let's go into a lower time frame, and this is the 30-minute. As you can see, what are the investors doing? Why the price that was 2 days ago at 1878 was brought to 1807? So more than 700 pips of movement in 24 hours. This is the concept of pricing in. Which means that if the investors have at this point have, as I said, the leak of a potential of a higher interest rate hike than expected, they are going, even if it's not a high chance, even if it's not very likely, whatever, what they will do, they start selling gold. I mean, of course, if the interest rate is high, gold is bearish. If the interest rate is low, like 0, gold is bullish. That's the basic. So here you hear that there's a high potential of interest rate hikes, higher than expected. So what investors do, they start selling. They sell. They sell the rumor, because there's a chance that the interest rate hike will be higher than expected, 75 base points. Yeah, sorry, it's very interesting to understand where the price was reacting and what is going to happen now. Okay, today we had this retest of this PSA. Now we are in the middle of the range. What is going to happen today? What might happen is that two cases usually. We have this and this. So we might have that Fed actually increases rates at 75 bps. And this, in my opinion, I think, since the consensus overall is still 1.5, it might still be a bearish move. So might grab some liquidity over there and then continue down at least at 18, even more, 1800. What can happen is that the Fed only increases rates at 50 bps. In this case, in my opinion, what will happen is that we'll have a spike down and then continuation up above 1830. Because why? Because the investors already priced in, this is all the whole concept, already sold for 75 base points. If the Fed now releases only 50 base points, then in my opinion they will close their position, because okay, yeah, we already sold 75, now the Fed is coming not that aggressive, I will close my position and buy. So I will see a correction of gold on the upside. I think there might even be a more neutral position where maybe Fed, not neutral, but in the middle, increases 50 base points, but is very aggressive in the conference, announcing possible aggressive 75 hikes at next meetings. This might be sort of meh, because of this can still be bearish for gold, can still be bearish, but overall, but for the short term, it can be that we don't know how the investors will react. Might be that in short term, they think, okay, the Fed is not acting now because even with the CPI at almost 8.6%, they are scared. They are not as aggressive as we want to. So no, it's similar to this. So we will buy. And this for me is sort of the situation. What can be has to be very, very important to hear the words of Powell today, how it will address the questions, how it will answer, and what eventually actually the interest rate hike will be, 50, 75 base points, and what will be the reason and the announcement for the future meetings. So yes, this is it. This is for me the outlook of the of today FOMC. Let me put this. Fed leaking. Let's say potential for 5 base points rate hike. This is for me what might happen today, and I see you guys next time.